If you've ever wondered how the wealthy protect their assets, minimize taxes, and multiply their income without exposing themselves to risk, the answer often comes down to one simple structure: the holding company. At first glance, it seems complicated, but once you understand it, you'll realize why this is one of the most powerful financial tools in existence. A holding company doesn't produce anything or sell anything directly. It simply owns other businesses, investments, or assets. That's it. But that separation of ownership from operations creates a huge strategic advantage. Imagine you run a successful e-commerce brand. Instead of operating under your personal name or a single LLC, you create a holding company that owns the e-commerce business. Now, the store pays dividends or profits to the holding company, and you control everything from above. If the store ever gets sued or goes bankrupt, your personal assets and other business interests are protected. The damage stops at the operational level. But asset protection is just the beginning. Holding companies also give you enormous tax flexibility. You can shift profits between companies, defer income, and invest through the holding company to reduce tax exposure. In some countries, holding companies enjoy lower corporate tax rates or capital gains exemptions. Even in the US, states like Wyoming and Delaware are popular because of their friendly laws for corporate structures. Want to go global? International holding companies allow you to take advantage of different tax treaties, banking systems, and investment environments. It's how multinational corporations legally pay less tax than a small business on Main Street. Real estate investors also use holding companies to structure their portfolios. Each property can be held in a separate LLC owned by the parent holding company. This limits liability and simplifies management, especially when working with partners or lenders. Then there's the exit strategy. If you decide to sell your business or property, you can sell the operating company, not the holding company. That means the money stays inside your financial ecosystem, potentially tax-deferred, ready for reinvestment. The key benefit is control. Holding companies let you centralize cash flow, investments, and risk management across all your ventures. This is how family offices, private equity firms, and high-net-worth individuals manage their empires. And it's not just for billionaires. Anyone can set one up. All you need is a well-formed LLC or corporation, a bank account, and a clear structure. Of course, working with a legal or financial advisor is essential to make sure everything complies with local laws. The point is, this tool exists, and most people never hear about it. If you want to level up your wealth game, the first step isn't another side hustle. It's thinking like an owner, not just of one business, but of an entire portfolio. That's the mindset of wealth. And the holding company is the structure that holds it all together.